Hello, everyone. Welcome to today's live session where we catch up with what's been going on with markets and where they look set to end the week. I'm David Jones. We try and do these every day during the week. So we'll take a look at the major markets. So we'll take a look at euro, US dollar, pound, US dollar, gold and oil, and also stock market indices. Let me just bring up the risk warning while I'm talking away on the introduction. I think it's been a bit of a scrappy week. I think particularly over the last couple of days, I think volatility has been pretty low. I think we did have some bigger moves at the beginning of the week, but it's been really quiet going into the end of the week. I'm not quite sure why that is. I mean, it's a half-term holiday here in the UK. I don't think that's really impacting markets too much, but I know a lot of people are away from their desks. I think when it comes to Brexit, there's still the waiting game going on with that. I think the pound is under some pressure this morning, just on I think an EU official saying there's a meeting in Egypt next week, and he's saying there's going to be, or he or she was saying there's going to be no last minute deal in the desert when it comes to Brexit. So I think the pound's been slipping today, just with it looking like nothing's going to go ahead there. But let's jump in and get started and take a look at the trading platform. Let's bring this up. I think the euro is a great example for how low volatility has been. I was having a quick look before I started today, but if we look at the last 3 days for euro US dollar, if we bring that up, I mean it's been so uneventful since what, February the 19th. So that was today's 21st, so Tuesday. Since Tuesday afternoon, it's traded in about a 50-point range. So it's gone from, on the upside, 113.70 to as low as 113.20 on the downside over 3 days. That shows, I think, just the lack of volatility that we've had. So personally, I've not done much trading this week because there just hasn't been the moves really. So hopefully things get back a bit more back to normal next week. But while we're on the euro, let's take a look at it. I think I recorded a video yesterday. It should go up on Monday of next week on our channel, taking more of a medium to longer term look at the euro's fortunes for the year ahead. And really, from a longer term point of view, it's all about this big level. This pretty much 112 on the euro has provided a base since November. It was the 2018 low. The market did come back to it, a week ago, last week, 15th of Feb, and it's held again. But it just can't build any sort of sustainable rally. So it's just a little bit dull. And I think clearly, Brexit is playing its part here. The European, it's an uncertainty for the European economy as well. And it's just been a pretty dull couple of weeks for euro US dollar. So if we flip it over to the hourly charts, if we did see weakness back to the lows from last week, down in those mid 112s, that does look like a buying opportunity. From a really short-term point of view, going into this afternoon, 113.20 was support yesterday morning and yesterday afternoon. So 7 o'clock yesterday morning and 10 hours later, 5 o'clock yesterday afternoon, we saw this 113.20 being support. So maybe if we're looking for maybe a very short-term trade this afternoon, that could be an interesting level to watch. It's currently trading at 113.30, but there's not too much to say apart from that. It's just really dull. Arguably this downtrend that had been in place for all of February has been broken over the last week or so. So maybe running into the last week of February, we could see something of a euro recovery, but we've just had nothing over the last few days. So it's been a bit like watching paint dry, euro US dollar. Let's take a look at the pound. So we'll see, you can see it's slipping today. Let's bring that up, pound US dollar. Maybe we'll have a look at euro US dollar as well. So there's the pound. So we're currently trading at 129.90 on the pound. It's the lowest it's been since the beginning of this week. And again, you can see just the lack of volatility after the initial surge. So we had the sort of the 130 level providing support. We've been as high as above 131 briefly this week, but very little in terms of direction. over recent days, and it's just slipping now below that 130 level. I think, like the euro, if you flip this over to an hourly chart, you know, that downtrend that had dogged pound US dollar for the first couple of weeks of February, you know, looked like it broke last week, broke out, went a bit sideways, moved higher to 131. So arguably, it is still a buy the dips market, but it's a weird one, pound US dollar at the moment, because of all this Brexit stuff. You know, maybe some levels to watch going into next week if we see the market continue to be under pressure this afternoon. Let's see how it performs if it gets down to maybe 129.50, because I think that could be a trading opportunity. If we saw strength coming in the mid 129s next week for pound US dollar, you know, maybe looking to buy with a stop loss under the 129 low could be an interesting trade. But you can see, I think you can see how extreme the RSI is going at the moment. So this is the most oversold the RSI has been, this sort of creamy yellow line down here. It's the most oversold it's been in about 10 or 11 days. And it's really a function of the low volatility we've had in recent days. So any sort of move is going to drag the RSI to an extreme. So I wouldn't necessarily read too much into that. But as we go into the end of the week, the pound is looking a bit weak against the US dollar. And it's really a function of hopes fading yet again for any sort of Brexit deal. How many times have we had that over recent months? Let's take a quick look at euro sterling. Then we'll get into we'll have a look at oil and gold. So let's have a quick look at euro sterling. Let's take this out to a daily chart. I mean, it's had such a clearly defined range over the last 18 months or so. At the bottom of the range, 86 has been the floor. So when the euro has been worth 86 pence, we've seen the euro strength come back. When it's traded up to sort of 90, 91, we've seen the sellers come in for the euro. And nothing much has changed. Now, you could argue that actually the move we're seeing today, we're seeing because of that pound weakness today. This is a daily chart we're looking at. So the latest candle here, I'll just continue zooming and just see what that looks like on your screens. Hopefully you can see that. So we are seeing a bit of strength today for the euro against the pound, you know, so, which you would expect, you know, because we've been down briefly over the last couple of days below 87, and historically we've seen buyers for euro sterling down here. So maybe we'll have more of a run for the euro going into next week. But it's just been a pretty flat week for these currencies since the initial surge earlier in the week. Let's take a look at oil. Bring up the oil price. So we have, you know, hit almost a 3-month high for oil this week, continuing that recovery that's been in place since just after Christmas. So it nudged. Where did we go? We went 57.64 on Wednesday, 57.64 again yesterday, and 57.71 today. Okay, so it's pushed out today to another recovery high. So the best levels since middle of November. So 3-month highs on the price of oil. And that trend is still strong. That trend is still going up. So I would still be inclined to be a buyer of oil. I think the question mark here, and it is potentially a big question mark. Let's not forget how far this market's come. It's come from about $42.50 to 57 now. So we've seen a $14 rise. We've seen a 30% rise since those lows. That is a heck of a move in 2 months, you know, for a major commodity like oil. So I just start to think about, well, when are we going to see maybe some profit taking coming in? And I think $60 is probably a level to watch. You know, it was the highs just when after it stabilized for a couple of days back in November, sells off, bounces back. 58 to 60 was a problem. So maybe next week we might see some of this momentum going. But I think if we did see a deeper sell-off, it just looks like a buying opportunity. If we flip this over to the hourlies, you know, we've got various pockets of support left for oil. The latest ones, the lows from yesterday, about 56.60. After that, it was tested a couple of times this week, 55.60, 55.70. So even if we saw the price drop a couple of dollars from here, I think it still looks like a buying opportunity. That trend is still up, but I think we just need to be wary as we push nearer to that 58 to 60 barrier. Could we see a bit of selling come back in? Let's see what happens. Now, gold was, I think, one of the bigger movers yesterday. So we did see, I think it's dropped back about $15. It's dropped back a bit more. It's dropped about $20 off the highs for the week for gold. Let's just pick it up on the dailies. So we still have this recovery off those August lows is still going. We did on Wednesday touch fresh highs for the recovery, up around about 1346, that sort of level. And again with gold, that trend is still up. And I've still got sort of a more of a medium-term position on gold. But again, just maybe starting to get a little bit nervous, or at least aware up here of the problems we have not a million miles above where we are now. You know, for the late 2017 and the first 3 or 4 months of 2018, 1365 was a real problem. We came within $20 of that level earlier this week. So I think even though that trend is still up, you know, I think we just need to be aware there's a big barrier coming for gold. I still think we'll see it push a bit higher. You know, this sell-off that we've seen, for now at least, it's no different to any of the other minor sell-offs we've had on the way up. So let's just take a look at some of the levels to watch. Maybe not for this afternoon, but going into next week. So Feb the 20th, so that was Wednesday. This is when we saw it set its latest recovery high. We've pulled back yesterday. It traded as low as 1320, near enough. And it's come back and touched and held today. So you could argue, if you really wanted to be a buyer of gold today, and you had no other choice but to buy gold. I mean, it's interesting down here because I think an obvious place, the closest I would want my stop loss, is below yesterday's low. So below that 1320 level. So on Monday, let's take another look at that and see how 1320 has fared. So in the short term, I think this whole 1315 area, because it was the highs, 1315 was quite a barrier in February, earlier in the month, and then 1320 from back here, end of Jan. So 1315 to 1320 is, I think, the zone to watch for a potential turnaround in this last couple of days weakness for gold. Okay, so that the recovery trend is still going. Sold off a bit over the last couple of days. Let's see what happens. Let's see if we see 15 to 20 continue to hold for gold. And then let's take a look at stock markets. So a bit of a wobble yesterday for US markets, but they are sort of making it back up overnight. This is the Dow Jones. Let's just start with a daily view first of all. So the market, if I can let me just zoom in to the daily candle. So yesterday, the market, the Dow, did push to a fresh recovery high. You know, this market has rallied more than 4,000 points now from that December low. So it did push to a fresh recovery high, trading up to 26,090, that sort of area yesterday. And it is getting interesting now because we have these old highs running from 26,100 through to 26,300. And these are the levels that I'm going to be watching next week. So we'll talk about these a bit next week when we do the live sessions next week. So because we do have a potential hurdle, you know, 200 to 400 points higher than where the Dow is trading now. It's the old highs from November where sentiment changed, the sellers came out, bang, the market sold off. So I don't think it's going to go sailing through these levels, famous last words, unless we see something crazy happen next week, like the US drops interest rates or something, which isn't going to happen. But I think it's interesting going into next week. So let's just take a look at today, some of the levels to watch on the Dow. So looking at the trading yesterday, it did slip as low as 25,760-ish during normal trading hours yesterday. It bounced back a bit into the close, and we're already, about 100 points higher than yesterday's close going into this afternoon. So I think we are expecting the Dow to open positively. And I think maybe the opportunity is, if we see a bit of weakness in the first half, does it take another trip back towards 25,800 and do those lows from yesterday hold? So that's maybe the trading opportunity today. But again, you know, we can see for US markets, for the stock markets, another pretty flat week. Pretty sideways trading the last few days. The odd burst now and again. The last couple of days have been reasonably volatile, but a bit flat for the week overall. But for me, maybe the opportunity is if the market sells off down towards yesterday's lows, is there an opportunity there? The DAX has been moving. The DAX, I think today, has moved out to a fresh high for the year. Let's just take a look at that. Let's bring that up. Let me zoom that in to make it a little bit clearer. There we go. So there's our DAX. So currently trading just below 11,500. So we're at 11,488 on the DAX. It's the highest levels since early December. And again, for the DAX, if this DAX recovery is going to run out of steam, we're getting back to that area now. So we had the highs from November around about 11,684. Let's call it 11,700. So a couple of hundred points higher than here. So I think the next 2 weeks could be interesting ones for stock markets because we're getting back to these old hurdles. And if they break through, we've got a breakout trade on. And for the Dow, it's time to start looking at maybe a run back to the highs, the all-time highs from last year. But the DAX, strong today, is pushing higher, getting dragged higher by that bounce back in US markets. So going into this afternoon, still looks strong. And again, any weakness, we'd be looking at maybe the lows from earlier today, 100 points below where we are now, to see if they continue to hold. So not that exciting, but still broadly positive, I think, for stock markets. But maybe the more interesting market to watch this afternoon is gold, to see if 13.15 to 13.20 holds. I think later on today we do have a couple of officials from the US Federal Reserve, the US Central Bank, speaking later on in the evening UK time. So there could be some volatility off that, depending on what they say. But maybe we just set for a fairly quiet end to the week. So someone's asked, can we have a look at Coca-Cola? I think we did have a look at that earlier this week, didn't we? So let's see what that's done. Coca-Cola, because it gapped, didn't it? We'd had those really bad results, didn't we? I remember now. So we'd had those the poor results, and it gapped lower. So this is let's just bring that up. And I was saying that maybe the aggressive trade was to wait to see if it stopped falling, and then maybe take the view that the sell-off has been overdone. We have had that over the last couple of days. So for my money, if you wanted to trade Coca-Cola, you should have bought it a couple of days ago when it was trading more like 44.80. But the argument still stands. We've got really big support at 44. Pretty much 43.90 to 44 for Coca-Cola. Look how oversold the RSI has gone, how quickly that went oversold because of the size of the fall. MACD still looking a bit bearish, but if you thought, well, actually this fall had been overdone, I think you've got the perfect reference point for where to put your stop loss, so the other side of 44, because that has been such a floor for the price of Coke. So you either just jump in and buy it and put a stop to the other side of 44, or you wait maybe for next week. Do we get a move back and a retest? But I think it's interesting that after that, it did sell off for 3 days on the back of its results, but it has held above those old lows, and we've definitely seen some strength coming back over the last couple of days. Let's flip this to it. If you look on an hourly chart, there we go. It doesn't look maybe quite as drastic, but that was the move down Feb the 19th. And then it's really the 20th and 21st yesterday. This is the US listing we're looking at. So on Wednesday, some stability, and yesterday it did start picking up. But I think that's an interesting share to watch, given the move that we've seen this week. And I think that's it. That's it from me for this week. Let me just put my contact details up in case you have any questions. But we'll do this all again on Monday. We'll start again on Monday. Hopefully we'll have a bit more of a volatile week next week when it comes to the currencies and stock markets. But to find out more about the company, go to our website, Capital.com. Any questions about this, you can leave a message on the YouTube video because once we finish doing this live, it stays up there as a recording on YouTube. So any questions, I do check back. But if you want to email me directly, my email address is david.jones@capital.com. But it's a bit of a dull end to the week. Next week could well be a bit more exciting, but we'll wrap things up there. So thanks for coming along. Hope you enjoyed it, and hopefully see you all on Monday.